This is a typical live trade example, and I want to explain how exactly I got into this trade using my smart money trading concept. Looking at this movement of price, of course, price has been bearish. Now you can see how price is moving. We have this lower high, we have this lower low, we have this lower high, and then we have this lower low. So if we look at this zone, all of this movement, we need to identify our point of interest. And the only point of interest we are having here is our order block. So this is our order block. So we had our order block. And since we've identified this order block, our next expectation is for us to wait for price to pull back into the order block. So obviously, let's say when we had this is what we have for the first time. All of this movement was what we had. Then we marked our order block. So our expectation is for price to do what? To return from here into our order block. So this is what we were expecting to see price. Before we now look forward, our sell entry from that zone back to the downside. And through to it, price pull back into our order block. So now that price has come into our order block, we are not going to make entry in isolation. We will now need to identify a confirmation signal, because we can see bullish movement, the impulsive move, how buyers brought price to this zone. And since we want to sell, we will need a signal that sellers have come into this price before we will be able to do what? To sell. And how exactly do we do that? We will need certain behavior patterns of what? Of the sellers. So when price come back, we had this particular bearish candle. Now this bearish candle did not engulf the previous bullish candle. So this signal is not valid enough. Subsequently, we wait for the other formation. We now had this other bearish candle. Now this particular bearish candle and this were able to engulf this particular bullish candle. So we now had this presence of what? Of sellers here. And that is how we were able to make our sell entry at the close of this candle. So you can see that was the sell entry, and this has split out for like 2 hours before price went up again and gave us this particular bearish pin bar. So if you have missed the first entry, this particular bearish pin bar now should be your next entry. So that should be your next entry if only you missed the previous one. So that is how simple this would have been using what? Using our 1 hour entry time frame. If you were to make this entry based on break of structure, what you would have done is that immediately price came into this zone, you will move to your 15-minute time frame. So the return of price into that zone on the 15-minute time frame follow the process. Price will not just jump. When you come to the lower time frame, you will see it as a price structure. So you are seeing higher high, higher low, higher high, higher low, higher high, higher low, and a higher high. So if you must sell, certain condition must be met. And what is this condition that must be met? Here is the condition, let me show you this again. You have this higher high, higher low, right? Higher high, higher low, higher high, higher low, higher high, higher low, and higher high. What is the condition that was met? Here is a typical break of structure. That point you are seeing there is a break of structure. So price broke structure here, as you can see. And since we had this break of structure, we will now mark out our point of interest on this lower time frame, because we are obviously looking for opportunity for us to sell. First is our order block. We had this order block on the lower time frame that we have marked out. We don't have a smart money cube, but we have a fair value gap. Here we had this fair value gap. So that is our fair value gap. Now in that fair value gap, it coincides with this breakers block. So that is a double confluence for that zone. So it's a double confluence for that zone. And so this is our breakers block. So what do we see? You now wait patiently. This is 15-minute time frame for price to do what? For price to retest into that zone. So here now you can see that price came down. Price came down here and then pull back to retest 50% of the fair value gap and the breakers block. So after that we had these bearish candles, and that would have been our sell entry. Based on this, our stop loss is supposed to be at this level. So I will adjust this stop loss to this point. So this is how exactly we can make our entry based on break of structure. So this is simple. You can watch this video again. I believe you have gained value. Please do not forget to like, share and subscribe. Ask your question in the comment section, and see you in the subsequent video.